I can do that.
Let's get a check on crypto today. Bitcoin prices sliding a bit overnight after a big run-up in July, as you know, ahead of both the Fed meeting and long-awaited crypto policy report on Wednesday. According to the administration's crypto task force, that report will be a set of recommendations around potential regulation ahead, including the feasibility of a strategic national stockpile of crypto. And speaking of Bitcoin, Tesla disclosing in its earnings this week that its digital asset holdings are currently worth about $1.25 billion. That's up sharply from a year ago. A new piece on CNBC.com looks at the money they left on the table, though, after they sold 3/4 of their holdings in 22. You can check out the full story on CNBC.com. I did peek at that, and I think if they had held everything, it wouldn't be $1.25 billion. It'd be worth about $5 billion.
Ooh, they could use that.
Yes.
They could use that, particularly as the carbon credits and everything else comes off. Did want to mention MicroStrategy real quickly as well, because they did this perpetual preferred, interesting piece of paper. Morgan Stanley, the underwriter, they were going to come with the expectation of about $500 million they would raise. They raised $2.5 billion. It's 9% yield or dividend. It pays a dividend. It pays monthly. And it guarantees par. It's an interesting piece of paper. A lot of demand, obviously, for a company that owns about $71 billion worth of Bitcoin. As we pointed out many times, the market cap is far above, in excess of the $71 billion. And they have obviously been issuing the converts to help fund their purchases of Bitcoin. They got about $8.2 billion in converts out there. $3 billion are in the money, but having no problem.
That's a lot more Bitcoin they can buy now.
Yeah, no problem raising money at all. Obviously, it is backed by the Bitcoin as well. Also wanted to move on to one of the big movers. You just saw it moments ago. That is Charter. It is down, it's kind of an astounding 18+% right now. Excuse me, 17.8%. Had been down as much as 18% at the absolute lows after the company reported earnings that are not being met well by investors. Maybe it's positioning, a la Dan Niles. A lot of these pods that were long this stock coming in, I'm not sure. It's that number there on the left. 117,000 was the loss of internet subscribers. That's broadband. That's worrisome. How often have I sat here talking with Carl and Jim every day about fixed wireless and the additions? We saw it with T-Mobile's quarter. We saw it with AT&T unexpectedly, given how much they're focused on fiber, but they added 200,000 fixed wireless subs. We've seen it as well with Verizon. It's taking a toll, one would have to believe, despite the fact that Chris Winfrey, the company's CEO, says we will get back to adding internet subscribers. At least he said that on the call. They are not right now. That is clearly a concern. On the video front, not nearly as important, but not unimportant. Only a loss of 80,000 subs quarter to quarter. Actually, not that bad in terms of where things stand there. But not to mention the big, beautiful bill, which is reducing their tax bill at Charter, but is also reducing the tax bills of their competitors, namely the likes of AT&T. And what are they doing with that money? They're accelerating their build-out of fiber that is competing against Charter. And so, well, I guess a lot of questions right now in terms of their ability to get back to adding subscribers, the broadband subscribers that are so important to its business. It's having an impact across the board, as you see right there. Our parent company, Comcast, shares down almost 6%. You can see Altice as well, which has an enormous amount of debt and a very small market cap, also getting hit. By the way, Charter doing that Cox deal, they're issuing over 30 million shares. 11.9 billion is what it was valued at when they announced the deal back in May. It's not worth that anymore, Carl, of course, with this significant decline.
I wonder, on the sub-weakness, is that in any way related to softness at the low end of the consumer? I only ask because we got a downgrade of Procter today, largely from J.P. Morgan, sort of looking at challenges in the lower cohort.
It may be. I mean, you know, there was the Affordable Connectivity plan or program that under the Biden administration that went away, and that particularly for that cohort, and that impacted a lot of these numbers previously, but that's kind of gone now. So you may be right. It may simply be an affordability issue to a certain extent. I should, by the way, say that now Charter did say for the year ago quarter, the impact from the loss of the ACP was only 50,000 subs, not the 100,000 they previously told us. But none of it looks particularly good right now.